In this video, we are debunking the top 6 capital raising myths. First up, the myth that capital raising is a mysterious dark art that's reserved for the well-connected. In reality, it's a structured marketing and sales exercise where you are providing a process of engagement with the potential investor. Myth number 2, the quick fix. Then there's a belief that capital raising is a sprint. Spoiler alert, it's a marathon. Success doesn't come overnight. It requires profiling, promotion, presentation, and publishing of key announcements and success metrics that you achieve in the journey. Myth number 3, it's easy to sell a secret. Many founders believe that exclusivity is the key. The reality is, this is reserved for the top 0.1% of deals that are able to achieve that. For most companies, it's all about creating visibility. It's about going from unknown to known with the potential investors to make them aware about who you are, what you're doing, what your vision for your business is, and how well you've been able to execute. Myth number 4, one size fits all. People seem to think the capital raising process is create pitch deck, send out to VCs and angels, wait for money to come back in, then do announcement to startup media. Unfortunately, that is not the case. Each capital raise is unique for each company. Myth number 5, investors are just check writers and you can treat them like a transaction. Investors are human beings. It's easier to get into a startup than it is to get out. In fact, there's a common saying that it's actually easier to get out of a marriage than it is to get out of a startup. So this is a long-term relationship between you and your investor. Treat it as such. The right investor can bring experience, networks, and invaluable guidance. Myth number 6, you are entitled to raise capital. This is the biggest myth of all. None of us are entitled to raise capital. None of us are entitled to succeed. We have to work for the opportunity for investors to want to invest into our business.